Hi, this is JJ the CPA. And
JJ the CPA here. Hope you're doing well. Listen, I wanted to do some far out tax planning related to PPP, and that's related to the Qualified Business Income Deduction, QBI. So the one thing to really keep in mind when you're now considering, should I do 8 weeks or 24 weeks, would be, is that going to affect your qualified business income deduction? Well, what's the qualified business income deduction, JJ? Well, that is where if you own a business and the income qualifies, which is a trade or business, which is self-employed, partnership, S-Corp, Schedule E, maybe, Schedule E, page 2, most likely, Schedule F, yes, if you're active. Point is, if you have net income from a business, you should be qualifying for the qualified business income deduction, which is simply that net income times 20%, and that amount is not taxable. Now, I would take a series of videos to walk through that, so if you're not familiar with that, you'll need to talk with your tax pro to inquire if you took advantage of that. Most likely, if you have a tax pro, you did, but you'd probably want to double check. Nonetheless, if you are over the threshold, which changes each year, and it depends on your filing status, so I'm not going to give you a bunch of numbers as it relates to that because you'll want to check with your advisor on that. So for those out there that are going to be over that threshold, and they're then going to have to look at the wages aspect of the qualified business income deduction when comparing the lesser of 20% of net income to 20% of taxable income minus net capital gains versus the lesser of the greater of 50% of wages or 25% of wages plus 2.5% of the assets. So the one thing we want to keep in mind here is that whatever PPP funds are used for, it's not going to yield a deduction for those expenses. So whatever's forgiven, those expenses included in that application will not be deductible, which includes what? Wages. Wages come into play if somebody's over the threshold and they're now having to look at wages for the qualified business income deduction. So at first glance, you'd think, well, it'd be better to have 8 weeks versus 24 weeks because that's going to be less payroll. Well, you'd have to run the numbers, but the thing to note here is that on 8 weeks at 75%, which is what we were using, okay, when you're looking at that, it's like, well, you know, we got wages, it's at 75%, okay, but now we have 24 weeks at 60%. So 24 weeks, even though it's more time, it's still less percentage of the loan forgiveness amount, which means that more of the loan forgiveness, that other 40%, can be used for those other expenses, right? So if we're trying to achieve 100% loan forgiveness and we're trying to max out the qualified business income deduction, I bet 9.9 times out of 10, it sure makes sense to me, if not 10 out of 10, that the 24 weeks at 60% would achieve both of these things with the best likelihood. So a couple of things to note on this. Let me ask you a question. What weighs more? Okay, this is from like 5th grade. What weighs more, a pound of gold or a pound of feathers? Okay, which weighs more? Okay, they weigh the same, right? Because a pound is a pound. Okay, doesn't matter if it's feathers or gold, 1 pound is 1 pound. So the thing to note is that 60% of that loan forgiveness being for wages, even though it's over a longer period of time, it's still only 60% of the loan forgiveness, meaning a pound is a pound. 60% is 60%. So someone having 24 weeks of payroll, whatever the 60% amount though that's included in the loan forgiveness, that'll be the only portion that is not going to lead to a tax deduction, which means that 40% of those expenses, the other expenses, would take up more of the loan forgiveness, which would then lead to less of a reduction in your payroll expenses. So how does that affect on the QBI? Well, again, if we're above the threshold and we're comparing 50% of wages or 25% of wages plus 2.5% of assets, if we've had to reduce down wages for a larger dollar amount, which is the 60%, right? Pound is a pound. If we're reducing down the wages, but as a lesser percentage, then we're going to achieve the greatest opportunity for our client to have the most forgiven properly. I mean, it's just taking normal payroll costs, not even trying to play any games here. And then getting the max qualified business income deduction. So again, on the wages, okay, so let's just go with an example. Someone has a $100,000 PPP loan, okay? After 24 weeks, they have $70,000 in payroll, and they have $40,000 in rent, utilities, and interest, okay? Well, when they're filling out the loan application, right? Well, if they got 40% of the rent, utilities, and the mortgage interest, okay? Well, you're including all of that, okay? And then of your PPP wages, well, you're including, even though they had 70,000, you're including 60,000 of that, okay? Which is less, okay? If you look at the 8 weeks and the old 75%, right? Same $100,000. Let's say that just the way that the example's working, because it's nothing but an example, they had 75,000 in wages, 25,000 in the rent, utilities, and the interest, okay? There's more going to wages, right? Seems pretty straightforward, right? But it's kind of a mind bender because you're thinking, well, 24 weeks is leading to more wages. That's probably not a good thing. Well, it's 24 weeks, but we're only having to then include a 60% amount of deductions that are going away as it relates to QBI. Know this, in either circumstance I just gave you, right? They would achieve 100% loan forgiveness, old way, new way. $100,000 of expenses that are used by PPP will not be deductible, period. But now we're wanting to pick what deductions do we want to be non-deductible, okay? Well, it would be better to have rent, utilities, and interest be non-deductible before reducing down the deductible wages, because the wages affect the qualified business income deduction. So I had a question of, well, is it better for the 8, better for the 24? And that's like, well, let's look at the qualified business income deduction and let's see how that's going to be affected. And so I'm telling all of my clients, we're doing the 24 week. What we're waiting on the SBA to tell us is, well, do we have to wait until after 24 weeks to apply for loan forgiveness, or once we feel we've achieved full loan forgiveness, can we then apply? Because remember, it's 8 weeks of payroll, right? You know, it's 2 months of payroll that was included in the loan. You got 24 weeks to spend it. Well, probably a lot of them, they've spent it within 8 weeks or within 10 weeks or within 12 weeks. That was kind of the whole point of this, and a lower threshold, which allows more expenses to be included. So, JJ the CPA here. I would love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. All right, hey, have a great day. Thanks for watching.